Megan, talk to me about what the margin outlook is, the outlook for margins at some of the companies that come under your coverage.
Yeah, good morning. Thank you. For the home builders, we've had some margin pressure over the last couple of years from several different fronts: higher land costs, higher labor, as we've seen labor shortages, and higher input costs. We're seeing a little bit of relief on the lumber side, which is good for the home builders looking into next year. Lumber's shot right back down again, almost as fast as it went up. But we're still seeing labor shortages, and of course, with tariffs coming through, we'll probably see increased input costs in other parts of the home building process. So I would say looking into 19, we probably will have some slight margin pressure, and that will also depend on how much pricing power these guys have. They've had significant pricing power up until recently, when we started to see sales pace slow, and brokers and builders talk about affordability concerns. So if we start to see pricing come down a little bit, certainly those margins will get squeezed as well.
Jim?
Yeah, Megan, this is Jim Bianco. Home builder stocks are down about 20% roughly year to date. Half of that move has come since September 20th. That's the same day that the 10-year broke above 3%. Is that the right causation that I've got there, that they're really coming under intense pressure because of the spike in interest rates we've seen over the last couple of weeks?
Yes, that's absolutely the case. You're absolutely right. I mean, they started to decline even late in January, early February, and that was start of interest rate fears. And then we saw the spike above 3, and we also started to get some proof that we had seen this summer slowdown. We hadn't really seen a lot of impact on the macro data until the summer data started to come out, and we're starting to get confirmation of that from the builders themselves. So it's all about interest rates right now. And if you look at the historical data, there is a relationship between mortgage rates and home sales, and you have to look at the pace of home sales. That's a big driver of valuation. So if pace slows, home building stocks historically come down as well.
So, Megan, listening to this, it makes me think that this could last a whole lot longer, that maybe price hasn't corrected enough. What do you say back to that?
I think you could be right. I think what we'll start to see first is potentially changes in mix. We put out a broker survey every quarter, and we started to see real estate brokers just this quarter say more than 50% of our brokers said they're starting to see customers change their behavior in response to rates. And what they're doing is looking at smaller size homes or looking in different geographies. So I think that's the first thing we'll see. There's still buyers out there. Traffic is still relatively strong, but they're changing their decision about what they can buy. So I think you're going to start to see mix shift first, smaller homes and maybe different locations.